Hello students and welcome to the lecture. So students, as we know that we are covering the financial system, and basically in the previous lecture we had finished the series of Indian banking system. Okay, we had covered the several topics in the Indian banking system. All right. So basically in this lecture we are going to start with another important series which we called as a Reserve Bank of India or the RBI. All right. However, in the previous lectures, we had discussed about the RBI many times. But remember, on that particular lectures, basically we had just taken in reference, or you can say basic overview. It's a basic overview, okay? Basic overview of RBI or the Reserve Bank of India. Got it? In this lecture, basically we are going to talk about the in-depth analysis of the RBI. Okay, like what is RBI in actual form, what are its various responsibilities, and how it discharges them off. Okay, so basically these is the index we are going to discuss about. Okay, like we will start with the introduction. We will see the monetary authority, banker to the government, bankers bank, forex custodian, regulator and supervisor, monetary policy, forex management. Okay, so now all these things basically we had just taken as a reference in the previous lecture, but now in this lecture basically we are going to discuss them in detail, or as I have told you, we are going to do the in-depth analysis. Okay, so let's begin with the first one, which is an introduction. So the Reserve Bank of India basically was established on April 1st, 1935 under the Reserve Bank of India Act 1934 as per the recommendations of the John Hilton Young Commission in 1926. So basically before starting this particular series in the area, should we just make an you can say quick check on the revision part. Okay, then we could proceed further. So basically if we talk about the monetary economy, okay, so we know that monetary economy is basically brought up in India by the Britishers, right? Britishers are the one who had brought the monetary economy into the India. Okay, and basically they are the one who started the banking functions in a proper form, or you can say in the modern sense. Remember in the lectures of the financial knowledge, or you can say in the banking history, I had told you one word, that basically India had the banking activities. Okay, but we didn't have any banking organization. Okay, in the modern history, or in the modern terms, the banking organizations were set up by whom? Who set up them? Britishers set up them. Okay, and it was started with the establishment of, okay, three major banks or the presidency's banks named as Bank of Bengal, okay, Bank of Madras or Bombay, you can say, and thereafter Bank of Madras. All right. What are the year of the establishments? Okay. Bank of Bengal, 1806. Bank of Bombay, 1840. Bank of Madras, 1843. Okay. So this is the establishment of these banks. Okay. And we know that that was the year of 1921 when all of these banks get combined and a single bank formed out. The name was Imperial Bank of India, right? Imperial Bank of India was formed after the merger of these banks. Okay. And basically Britishers were trying to convert the Imperial Bank of India into the Central Bank of India. But John Young Hinton Commission opposed the idea. Alright. And as a result, basically the RBI was established as an Central Bank of India, but the Imperial Bank of India was not converted into the Central Bank of India. So now the question is, what happened to Imperial Bank of India then? I had told you already in the previous lectures. For this, I am going to provide you 10 seconds, then I will give you the answer. Your time starts now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The time's up. So basically, the Imperial Bank of India was changed into the State Bank of India. After passing of SBI Act 1955. Okay. So this is just an revision part we had taken. Got it? So remember, the Reserve Bank of India was established on 1st April 1935, but the Act was passed in the 1934. Okay, and who recommended it? John Hinton Young Commission. In 1926, that was appointed to recommend the changes, and it recommended that it is not a good idea to change the Imperial Bank into the Central Bank. Okay. Initially headquartered in the Kolkata, the RBI central office was permanently relocated to the Mumbai in the 1937. This thing I had already told you. When the RBI was established, it was established in Kolkata. Okay, but in 1937, its office were relocated to the Mumbai, and even today the RBI's headquarters are at the Mumbai. Got it? Originally privately owned, the RBI became fully owned by the Government of India after its nationalization in the 1949. That was, I had also told you when I was telling you that the banks were nationalized in India into the 3 phases. Okay. First phase is 1949 when the RBI was nationalized and the Banking Regulation Act was passed, which made the RBI officially regulator, and you can say the controllable authority over the banking and the financial system of India. Second chance was 1969 when the 14 major banks were converted, okay, into the nationalized bank, and thereafter that was the year of 1980 when other 6 major banks were converted. Okay, so it was the year of 1949 when the privately owned RBI was converted into the nationalized bank and put under the control of Ministry of Finance. Okay. RBI's operations are overseen by the Central Board of Directors appointed by the Government of India in accordance with the Reserve Bank of India Act, with each director serving a 4-year terms. Okay. Basically, the RBI is controlled by the CBDT or CBDB, which is known as the Central Board of Directors. Okay. Appointed by the Government of India as per the norms and the regulations of the RBI Act. Okay. Maximum tenure of the directors are 4 years. Okay. Thereafter, taking the introduction, now we have the monetary authority. Okay. However, we already know that there are two bodies. Ministry of Finance. Then comes the, RBI, not Ministry. RBI. Okay. And these both bodies are indulged in some specific policies. Now the question is, what are these policies? Ministry of Finance is making which policy and the RBI makes which policy? Ministry of Finance is basically responsible for the fiscal policy. Okay. RBI is basically responsible for the monetary policy. Okay. Fiscal policy basically controls the expenditure and the revenue part, whereas the monetary policy is basically deals with the money supply in the economy. Okay. Got it? So now, because we are dealing with the monetary policy, so we have to deal with the RBI. The Reserve Bank of India plays a crucial role in issuing and managing currency in the country. Now, here is a one thing which I would like to make clear here for you also. Like, issuance of the money, and you can say currency or money or currency. Money or currency. The issuance of the money of currency is handled by the Reserve Bank of India. Okay. It means that Reserve Bank of India having the authority to issue the currency of all denomination in the country. But ₹1 note ₹1 note could be only issued by whom? Secretary of Finance. Okay. All the other currency of any denomination will be issued by the Reserve Bank of India, but ₹1 note is by the Secretary of Finance. Okay. So basically, in monetary authority, first we have the assessing economic needs. The RBI carefully assesses the economic conditions and the demand for currency in the economy. Consider factors such as the rate of economic growth, inflation, and the need for cash in various sectors. So basically what happened when we talk about the monetary policy? Okay. So as we had discussed, basically we are talking about the money supply, or you can say household, business, Corporates. Okay. Household, business, and corporates. So there is a flow of money. Like the corporates provide the salary to the household pay. Also, okay, there's a government. One term must be government. Okay, like the corporates provides a salary to the households pays the taxes to the government, and thereafter the government runs various schemes so that the money reaches back the corporates back. All right. Similarly, the government infuse the money received by the households buy the products and the services of the corporates, thereafter the corporates paying the taxes on various things to the government. So that's how the money circulates in the economy. Okay, and to control this money supply is basically the part of the monetary policy. Okay, as we know, higher the money supply, higher will be the inflation. Okay, thereafter lowering the money supply, basically deflation or low inflation. Correct. So basically what RBI does, RBI generally, you can say, assesses the economic needs. Okay, like what is the rate of economic growth, what is an inflation, what is the need for cash in various sectors. Like you can say, if the economic growth is slow, okay, it means that this is a condition of stagflation, or you can say recession. All right. So in such kind of situations, RBI basically done expansionary monetary policy. It means that the RBI infuses the money into the money supply. But when there is an inflation, it means that the prices are already higher, then it is a case of contractionary monetary policy. Okay, it means that now the RBI will try to withdraw the excess amount of money from the money supply. Okay, so this is totally depend upon the economic needs, like whether to invest, to infuse the money or to withdraw the money. All right, printing currency. Based on its assessment, the RBI decides the amount of currency that needs to be in circulation. It then prints the new currency notes to meet this demand. This process is carried out at the various printing presses of the RBI across the country. Okay, first the RBI assesses the economic needs so that they could make sure that whether to attend the expansionary monetary policy or contractionary monetary policy. Okay, it's depend upon the assessment which the RBI had undertaken. Okay, on the basis of this, they decided the amount of the currency. Okay, and then this currency is being printed in the various presses maintained and running by the RBI across the country. Okay, replacing the old currency. What do you mean by it? The RBI also withdraws old and the damaged currency notes from the circulation and replaces them with new ones. This helps in maintaining the overall quality of the currency in the circulation. For example, you can say, suppose this is the RBI. Okay, after the assessment, RBI was find out that note of worth rupees 200 crores must be in the circulation. Okay, this is the need. All right, then comes the term on ground. On ground, basically you can say notes of worth rupees 200 crores already in the circulation. Okay, it means that the need for 200 crores, circulation is 200 crores. So you can say demand or need is satisfied. First condition, got it? But on ground reality, notes of worth rupees 30 crores are either damaged or old, that they are not absorbing the flow, or you can say not accepting by the people. Okay, so there are two conditions. Got it? So if you just look the upper picture, what happened? RBI will decide, okay, this is a need, this is the on ground reality, demand is need is satisfied. But after in-depth analysis, it will find out that out of 200 crores, 30 crores rupees or 30 crore worth notes are not as per the required standards. It means that they must be replaced. So what happened? The RBI will replace these 30 crores with the new notes of 30 crores. Got it? So this is generally maintains the overall quality of the currency in the circulation. Got it? Distributing currency. What do you mean by it? Once the currency is printed, RBI is responsible for distributing it to the various banks and the financial institutions across the country. Okay, this ensures that there is an adequate supply of currency in all parts of the country. Okay, so you can say basically infusion of currency in the economy is done by the RBI. Got it? But through the two channels. First channel, government. Okay. Second is the banks or financial institutions. Okay. So through the government, the currency is provided to the households and the corporates and all. Okay. In the line of credit, banks and financial institutions provides the currency to the prospectus. Okay. So basically it's the responsibility of the RBI that after printed the calculated amount of currency as required. Okay, now RBI must be ensured that the adequate supply of currency in all parts of country must be maintained. Because if there is a case of any you can say the concentration of the currency, and you can say any inclination of the currency during the one particular segment or the sector only, that it will be a mutual destruction case for both the sectors. Why? Because the sector in which it was in excess will experience the inflation. Okay, the sector in which it is in the case of you can say scarcity, that will experiences the case of deflation. Got it? So remember, Distributing currency is also the task of the RBI. Controlling the money supply. One of the key objectives of the currency management is to control the money supply in the economy. RBI aims to strike a balance between ensuring there is enough money for economic transactions and preventing excess liquidity that could lead to the inflation. Okay, we had discussed that the inflation is good, but only in the controllable manner. Okay, so when the inflation crosses the boundaries and the lines, basically there is a case of instability in the economy. Okay, and in order to control the inflation or the deflation, the money supply must be controlled. Got it? So it's a responsibility of RBI to assess the economy in a well manner and then provides the effective monetary supply. Monetary circulation. RBI also monitors the circulation of the currency to ensure that there is no hoarding or illegal activities related to cash. For example, you can say this is an RBI. Okay, they infuses 200 crores in the economy to ensure the adequate money supply. Okay, so basically when we talk about the money supply, we're talking about the money circulation. It means that the cycle must be continued from one point to another. All right, but what happened? Out of these 200 crores, 30 crores rupees have been smuggled, or you can say illegally hoarding. Got it? It means that 200 crores must be required, but right now only 170 crores were in the economy. So what will happen in such a case? The 30 crores is in shortage. So when the RBI will try to produce 30 crores, meanwhile, the hoarders, or you can say the smugglers, will transfer, or you can say will start transferring this 30 crores back to the economy. Okay, so this creates a disbalance. All right, because this will raise the chances of being hit by the inflation or by the deflation. Okay, works closely with law enforcement agencies to curb any such activities. All right, so students, basically in this lecture we had started the discussion over the introduction. We had taken the revision of the RBI and we had discussed some of the facts and figures of the Monetary Authority. Okay, in the next lecture, basically what we will do, we will continue from here. Till then, just make sure you should revise all the facts and figures which we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.